Hello traders, it's Dale Pinkert at Forex Stop Hunter on Twitter with a couple of views on significant markets here today. We had this tremendous drop of the stock market in WTI crude, and since January have recovered this market all the way back towards this 56 level. We are not confirming up here at new highs. I would not chase the energy market. I believe that we could see higher levels up towards 68, but I believe pullbacks are still viable back towards the $50 level, possibly even a little bit below it, and should keep an eye out if you're long oil related assets. Nothing wrong with going to the door and taking partial profits. You never go broke taking profits. The next chart I want to talk about is the Kiwi yen. And the Kiwi yen is a risk on, risk off currency, similar to what we have Aussie yen being used as risk on, risk off for a long time. I'm just a little bit more negative the Kiwi because I think it's been overdone, although the Aussie is more affected by China. I'm showing you a 4-hour chart and believe that there's a possibility for a three drive formation up around 76.20 to 76.50, and that's really going to tie in with whether or not we finally get some type of corrective move in the S&Ps and the Nasdaq. And I want to bring up the Nasdaq. I talked about SQQ being an inverse ETF, bearish ETF 3 times a few days ago. I just want to point out on the daily that the S&Ps and the Dow have all closed well above the 200-day. Nasdaq sitting right on it. There are some 4-hour and 1-hour divergences here. And as I said before, I am not looking for a crash in this market, but the potential does exist for it to pull back perhaps 61.8, 50%, and think that there is potential for this market to pull back and correct the advance that we had from the January low. The hook may be that we're closing above the 200-day. A lot of people paying attention to that moving average. I do as well. But looking for eventually, and I do think by the end of this week, some type of high to develop in stock indexes across the board and a correction to ensue into the March-April timeframe. So here's your look on the NASDAQ 100. Remember that every time that you click the mouse, you're assuming risk. It's important before you do that to know why you're doing it, what the contingency is, if the contingency is negated, to be out of the way, as well as what you're looking for. The potential on the trade should be at least a 3-to-1 profit risk ratio. So I'll be back with you tomorrow, give you an update. Bitcoin followed through to the upside, and silver is making a lower high while gold has made a new high towards that 1340 area that I talked about yesterday. Remember, don't just count your pips, count your blessings. See you tomorrow.